Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We are live in Orlando, Florida, Commonwealth National Conference for Financial Advisors. It's raining here, but apparently we have a hurricane on the way. It's out in the the Gulf of Mexico, but making its way to the west coast of Florida. It's supposed to hit here on the coast. I think that Wednesday morning is kind of what they're saying at some point. So, but both Alex and I were scheduled to pull out of here tomorrow afternoon, so we should be okay. And the people here, they are used to these hurricanes, but they've had a really tough couple of weeks here up at the Bend up in northern Florida and now here on the west coast. So let's kind of put some numbers around it from an insurance perspective. And Matt Palazola, he does that for us. He's the insurance analyst for Bloomberg Intelligence. Hey, Matt, can you just frame out what the last week or two for hurricanes and this one coming up to hit the coast, what are the numbers around these things? Because they seem pretty big here.
Yeah, so what we knew was going to happen was with Helene, the losses were mostly are going to be uninsured. So storm surge and flooding is not really a covered peril by homeowners insurance. So you're going to see a larger than normal divergence between insured and uninsured losses with Hurricane Helene. We knew this was going to be a bad hurricane season. It wasn't actually living up to it until like the past week or so. So now we've got Hurricane Milton in the Gulf. It's Category 4. It will probably hear worse news before better. So it will probably strengthen to a Category 5. What's going to happen is it's going to hit a bunch of wind shear before it makes landfall. And that will actually lower the intensity of it. So right now the National Hurricane Center is still saying major hurricane, which is Category 3 or above. So it should be 3 when it makes the landfall. And I would just say one thing, on the forecast, you look at the National Hurricane Center website, and there's a cone on there, and they call that the cone of uncertainty. And that cone goes across the whole Florida west coast at this point. So it could be almost anywhere. The midpoint is that Tampa region, which is really a worst case for insurance companies, but that's where we're at now. So there's significant uncertainty over the next 2 days. And like you said, Paul, probably Wednesday morning where we have a landfall.
Yeah, that was when my flight was supposed to take off, so we changed that. But to your point, Milton rapidly intensified into a Category 4 storm. That happened around 9 o'clock, and then now at about 11 o'clock, the National Hurricane continues to rapidly intensify, so worse before we get any kind of better news. I keep hearing that if the storm goes a little north versus a little south, little north is more catastrophic, little south would be better. What does that mean?
So the main thing with hurricanes is the location, right? A larger storm could hit the Big Bend region, and you'd see the property values there are just not as high as somewhere in Tampa. So a stronger storm could hit a lower property value area, and you're going to have lower insured and economic losses. The real main problem would be a direct hit on Tampa Bay. So if you go, Hurricane Ian was a little further south a couple of years ago. That was $65 billion in insured losses. We're thinking this one just early could be tens of billions, could be in that $65 billion range. It could be higher, frankly, if it hits as a stronger storm. So that's what happens there. And the path can shift pretty rapidly. So it's going to be down to the last minute before we actually know what will happen with insured losses.
Hey, Matt, if I'm an insurer, why do I even write business in Florida? It seems like these poor folks are getting hammered multiple times.
A lot don't anymore, right?
I guess.
So, yeah, good question, Paul. So a lot don't. The large national carriers that we cover, a lot of them have avoided the region. Allstate is there, Progressive is there, so those are probably the two biggest public insurers. State Farm is one of the biggest there. That's not public. It's a mutual company. The companies that really will probably take the brunt of this are Florida specialty writers, so they're Universal Insurance, Heritage Insurance. They focus mainly, if not exclusively, on that Florida market, and those stocks are down significantly in the teens to 20% today.
When we take a look at the insured losses, I mean, maybe tens of billions, you said maybe the $65 billion range. What do we then extrapolate that the uninsured losses are? Because that was the part with Hurricane Helene that just sort of, the numbers are staggering.
Yeah, so The numbers are early, and I'm skeptical of some of the numbers out there for the economic losses. Typically, the insured loss, maybe you're looking at 40% or half of the losses. But what has happened in these events with large surge and flooding is that the insured portion becomes a lot smaller. The Tampa Bay, I believe it was the Chamber of Commerce, had put out a report in 2020 looking at what if a Category 5 hurricane hit the area. And they had said just residential property losses were somewhere in the range of $300 billion in that event. This probably won't be that bad, and I don't know all the inputs that went into that, but you could see something like that, which would maybe extrapolate $100 billion insured loss. But those were numbers that came out from Tampa Bay.
All right, Matt, thanks so much for joining us. Always appreciate it. Matt Palazola, he is the insurance analyst for Bloomberg Intelligence in our Bloomberg Interactive Broker studio back in New York.
Yikes.
We are here. We're in Orlando. And the folks here, again, it seems calm. I was at the park yesterday. People were there. Everybody had their ponchos on. The families were there. I mean, I guess, they're kind of hoping for the best here. But hardy people, those...
Well, when we were talking to Trapp earlier,
yes.
From Commonwealth, I was like, oh, did a lot of people wind up canceling? It was just a handful, really.
Right.
It was still 2,000 people here, so maybe a few hundred maybe weren't able to come. But that just shows the commitment to financial advisors. I'm actually surprised we're not tasked with being outside with the hurricane storm. And, we're not offering. We're just saying we're surprised we haven't been asked there.
That's
all right.
The Weather Channel people. Those people are. They've
Oh
got
my
that
gosh,
market. Yeah.
that is hardcore.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We need to get back to what's happening in the Middle East. It does not seem to be any lessening of the efforts and operations in that part of the world. Marc Champion joins us. He's a Bloomberg Opinion Columnist. He's got a column out today. Middle East transformation must start with Israel. Marc, tell us what you mean by Israel really has to be leading any kind of change there.
Well, the point I really wanted to make was that, Prime Minister Benjamin Netanyahu has been criticized a lot for not putting out a strategy to, sort of make sense of all of the military action and create a sort of longer-term path so that we can see, how to get out of the war and into some kind of security and peace. So, he went to the UN and he said, I do have a strategy and I do have a, a long-term vision. He called it the sort of the blessed scenario, but it's one in which, Israel becomes a kind of catalyst for the region with its economy, which is incredibly strong and sort of technologically advanced. There are connections, through pipelines and railways, etc., all the way through Israel to Europe from Saudi Arabia, etc. I was just trying to make the point, really, that for that to happen, he's right that there's no room for Hamas and for Hezbollah and for the whole axis of resistance that is committed and exists in order to get rid of the state of Israel. But he has a problem at home, and that problem is that there are extremists in his own cabinet whose language and kind of ideas about the future of Israel are very similar in the way that they don't allow for any kind of compromise, any room for the other side, in particular the Palestinians. So it's trying to sort of make that point and to say, really, if you want that sort of, secure, prosperous future where Israel is accepted and normalized within, the Middle East, then you really have to start at home, and you have to start, not just saying the Saudis are on our side, but listening to the Saudis when they say we want to be, but there has to be some sort of vision for how we get out of this.
Mm-hmm. Yeah, and Marc, you kind of make that distinction between strategy versus military force, right? And I'm just wondering, where do you think Prime Minister Benjamin Netanyahu stands on that spectrum of military on one side and then strategy on the other?
Well, so far it's been all military. And, it's not that I'm saying that, I'm not one of these people who sort of believes that Israel sort of, turned the other cheek after the appalling events of exactly a year ago today. They had to go in and deal with Hamas. They are dealing with Hamas. There are always questions, though, about how you do that and how you frame that in such a way that you can get people on your side. Whether it's Palestinians who don't particularly like Hamas, and there's a lot of those in Gaza, more than in the West Bank, for example, where they don't actually live under Hamas. You could say the same in Lebanon, where a majority of the population is not Shiite, does not like Hezbollah, does not want its country to be used as a platform for Iran to, conduct its foreign policy with Israel. You can talk about the Iranians too, where a majority of the population doesn't like their regime or want their regime. There's scope here for a different kind of Middle East. It's just extremely difficult to get to, and it can't just be done with weapons alone. Weapons can, actually open a path, but they can't get you to the other side, to a place of kind of peace and security.
So, Mark, to that point, does Prime Minister Netanyahu, does he have the political capital? Does he have the support of the people to play this long game that you're talking about?
Well, I think he would if he wanted to sell it. It's very interesting when, opinion polls are done in Israel. There's a couple of institutes that have done polls. And when you ask the sort of bold question, do you want a two-state solution with a Palestinian state, there's a majority against. When you ask the question, do you want a two-state solution as part of a deal with Saudi Arabia, with the U.S., and that would create this sort of secure environment and a multinational force in Gaza to create a transition there? When you put it as part of a package where people can understand how it might actually work, for their benefit, then the numbers change quite dramatically, and you get a majority in favor. So I think that it's all, as always, it's a question of what you sell, how you explain things, and I think it's a choice on Netanyahu's part to not go down that road. And there are understandable reasons in terms of just pure power politics, because part of his cabinet has told him very clearly that if he does make any sorts of noises about a two-state solution or a compromise, they will collapse the government.
So if we look forward, and if we wanted to see some kind of pivot from Netanyahu or some rhetoric that may indicate some kind of change or subtle shift, how would that be communicated?
Well, I think what you would start to see, so the main message that I think people outside Israel may not understand quite as well, but within Israel, what he's doing now in Lebanon and in dealing with Iran directly, that is extremely popular. Israelis are convinced, and with good reason, that Iran has been building up a kind of noose around their country, and that this is all very calculated and extremely hostile, and they have to do something about it. So the fact that they see Netanyahu now doing something about that, I think that is very popular. But you could, he certainly could sell that by, at the same time as he's going after Iran, he could organize a ceasefire in Gaza that would get the hostages out, that would start to sort of create some kind of scope there to create a more political path and to start building on that. So it is imaginable. It's just a choice that Netanyahu at the moment does not want to make, and I can't see any sign of him making that change anytime soon, especially when he has people in his government who are absolutely opposed to it.
Right. All right, Mark, thank you very much. We really appreciate getting a few minutes of your time. Marc Champion, Bloomberg Opinion Columnist, giving us the latest on the Middle East and maybe what might be some next steps there, but a very difficult situation, a fluid situation.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Paul Sweeney and I, we are live from the Commonwealth National Conference for Financial Advisors right here in Orlando, Florida. We will be back and taken off before the hurricane hits, though, so there is that. The theme for this year is The Future is Now, and that mission is to help advisors build a blueprint for their future and empower advisors to navigate business transitions. And this is the 10th year that Bloomberg Radio has broadcast live from Commonwealth's National Conference, so that's pretty cool. Joining us now is Trapp Kloman, President and COO of Commonwealth. First of all, thanks for having us. 10 years feels like a milestone.
It's terrific.
Did you get us anything for that?
Yes, I have some swag right over here. But no, thank you for all your support and coming.
So walk us through The Future is Now. What does that mean this year at the conference?
Yeah, one of the things as Commonwealth works to support so many advisors who are really small business owners, one of the things you have to do absolutely is be thinking forward and constantly navigating an increasingly complex industry with regulation, with technology. And if you're just focused on the next quarter, the next year, you're going to fall behind. So the future is now. You really need to be looking forward, and it's our responsibility, and it's one of the things that we enjoy doing is helping advisors think forward and start preparing now for the future.
Trapp, let's say I'm an advisor at a wirehouse at Smith Barney and Merrill Lynch. What's my thought process when I think about leaving the mothership and kind of going on my own and being a registered independent advisor? What's the thought process there?
Yeah, I think there's a lot of different reasons, but I think three that stand out and we commonly hear is one is you get to build your own brand. You build in your community and you're known for what you want to stand for. Two is just the greater independence to make your own decisions and not necessarily have to follow the lead of a larger employer who has many different conflicts and objectives and priorities. And third, and probably most importantly, is you're now building value in your own business that you can monetize. And so as an employee, oftentimes, you leave and you get the gold watch. Here you're building incredible value that you can leave to the next generation or sell. And we're seeing the values of these independent businesses increase dramatically over the last couple of years, and I think that's here to stay.
Why? So why is this increasing so much in such a small amount of time, and how do you see that playing out?
Yeah, I actually think the businesses were chronically undervalued historically. People didn't realize as there's been the transition from brokerage business, which obviously is commission-based and it's sale to sale. Our advisors are over 90% fee-based, and many are 100% fee-based as an RIA or fee-only. And when you have that recurring revenue stream and you're doing more than just investment management, you're doing financial planning and building relationships with clients that are deep and sticky, that now then has value versus something that previously was transactional. So as we've seen the growth in fee-based business, that has exponentially increased the value of those businesses and gives them something to transition.
So when you meet with your financial advisors at an event like this, Trapp, what do you hear most from them? What do they need right now?
Sure. Right now it's weather advice.
Yes.
Well, there's that. For those of you wondering, it is cloudy, rainy, not too much wind yet.
Yeah, no, not at all.
Yeah.
I think we're in good shape. But it's an array of needs, and I think one of the strengths of a community like Commonwealth is we have fantastic advisors who are willing to share with each other, and so they're always, someone's already been there, done that, so no one needs to reinvent the wheel. In Commonwealth, we can play a great role in bringing the best practices together to unlock them for advisors. So for a wide variety, it's how do you scale your business and get to the next level? How do you add and attract new advisors and train them? How do you take your technology, your internal infrastructure stack, adopt AI? It's an array of challenges. But one of the most fascinating things that has impressed me is so many advisors are like, where can I find the next client? At Commonwealth, we never hear that. They grow so incredibly fast through referrals. They're coming to us, how can I find the next advisor to keep up with the growth that we're seeing? And as you all know, as businesses are growing and scaling, you have to change your processes, evolve, get more administrative support. So we really help them, not just as a BD or an RIA doing investment management, we're helping them run small businesses. And that's really the central theme we're seeing.
How long do you think that growth can continue for, right? Because in essence, people made more money. The wages went up. We had the COVID stimulus, right? So they needed financial advisors, right? And you have a huge amount of equity within the stock market for regular individuals. at some point does that max out? And if we had like a huge drawdown or some exogenous event, those small businesses get real small.
Yeah, I actually, in looking at all the different factors that can drive that activity, we're still continuing to see growth in the population, growth in savings overall, if you will. So I think the demand for financial advice is actually only going to improve. And there was some concerns with the advancement of AI and what could the impact that be on many industries. But the reality is financial advice is not just, again, investment management. It's caring for people on a topic that can often be insecure and stressful. So, the most successful financial advisors are the ones who are really great at human relationships and caring for people through, very challenging times. And so I feel we have great tailwinds behind us, and we'll continue to see growth in this industry, not just in Commonwealth.
Well, one of my offspring actually did follow me in my footsteps in financial services. He works for a financial services firm, and his firm says that their clients are really going to need them over the next 20 to 30 years because they have this massive wealth transfer from my generation to the next. How do you guys frame that topic for your advisors? Yeah, no, that's absolutely accurate, and we have hundreds of breakout sessions here, and many are on that exact topic. And the wealth transfer between insurance, trust and estate, and taxation is very complex, and it's obviously there's a lot of emotion and people behind it. And so it is starting early in the planning process, and one of the things we have found and highly recommend and work with our advisors on is for whoever is managing the wealth or controls the wealth, if you will, is to start engaging with the next generation now. And really bring them into the planning and the reasons behind it. One of the most powerful things you can do, people always hear and understand, what is happening, but why is this happening? And so we have our financial advisors really engage in that wealth transfer early on to really explain that part of it and help all aspects of the family, not just represent one side and turn it into two people on the other sides of the table. We want to bring everyone to the same side of the table.
This is just curiosity, but how much is the conversation also revolving around retirement? Not for, say, me and Paul, but for, like, our kids. Like, who thinks that anyone's really going to have Social Security in 40 years, right? How much is that conversation evolving as the fiscal deficit continues to balloon out?
Yeah, I worry about that for myself, and I have 3 daughters who I don't even talk about Social Security because I don't
think they're necessarily going to have some, or you don't want to rely on it. Yeah,
you certainly don't want to plan for it.
Yep.
Think of that as a bonus, not as the foundation. And so, certainly one of the big things is, in thinking about retirement, is if you quickly put the Social Security in that perspective, what actually becomes a much more exciting discussion we're seeing more in this day and age is people firmly want to keep working and extend their careers, but doing something they're passionate about and that they love. And so often it's really about that second career. At what point can you make that transition from where you're building wealth and focused on that in your family to where you're focused on yourself and your spouse or the people you care about and doing something you're passionate about? And so it's less about retirement, and it's more and more, it's still a key part, but it's more and more too about what's that second career, and that really changes the retirement portfolio. It's pretty cool.
It's radiant second.
Yeah, I was going to say, is this it for you, Paul? Exactly. Is this the moment?
Exactly. Talent. How do you attract and retain talent? And maybe even how do your advisors attract and retain talent?
Yeah, it's an ongoing challenge, and it's one of the things when you're running a small business, as the advisors are, they're not just financial advisors, they're entrepreneurs, and that's a talent and skill that they need. And so certainly they can work with us to help them with that, but we're in all 50 states, and they're in their local communities. So one of the cool things we've done here is, historically, no one's going to trust the 20-something to manage their portfolio. It was tough to break into the business. That's changed with financial planning and a lot of the technology that's come to the space. And so a lot of universities across the country have certified financial planning programs, and they come out accredited, and they can come join an office and do a lot of the investment planning and run the work and then join in the advisor meetings. And so as we think about attracting and retaining talent, there's a growing pipeline. So in the past, the employee models used to train people cold. Now they're coming out of college prepared and can make a difference.
I have about a minute left, but are the people who are going to the wealth advisors, are they getting younger and younger, or are they still older and older?
We've seen it overall hold steady as we look at the average age and demographics, which overall we see as promising. Certainly people are getting older, but that means more people are coming with wealth. And so yes, people are addicted to their phones and are comfortable with apps. But once your wealth gets to a certain level, you become a little bit more risk averse in terms of owning that responsibility. And frankly, when you're in a relationship managing wealth together, you don't want to be the one solely responsible if things go sideways. You want to be with your partner aligned on your interest and have someone supporting both of you. So I think we're great with the wealth transfer and next generation coming in and trusting financial advisors.
Trap, thanks so much for joining us. Really appreciate it. Thanks for hosting us again, 10 years running. We appreciate that. Trap Kloman, he's the president, chief operating officer of Commonwealth Financial Network. We're down here at their national conference here in Orlando. This place is massive.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Alex Steele alongside Paul Sweeney. We are live from Orlando, broadcasting from the Commonwealth National Conference for Financial Advisors. The topic is the future is now, and this is the 10th year that Bloomberg Radio has broadcasted live from this conference. Very much looking forward to all the conversations we are going to have today. Let's kick it off now with Norman Grant, Managing Director of Grant Capital. Norman, thanks for stopping in. Good to chat with you.
Absolutely. Thanks for having me.
So the narrative in the broader market still, after we get this jobs report on Friday that was quite good, is that we still are in a U.S. exceptionalism scenario where stocks can still beat bonds, that this is kind of the narrative for the medium term. How do you guys look at it?
Yeah, we think that it's oftentimes really difficult to tell where we are in the cycle. And it seems like the Fed is doing a remarkable job of, creating this soft landing. We came into this year thinking that things were going to be very tumultuous. There were a lot of my clients were, very concerned, thinking that it was going to be a really challenging year. But I think it shows that how resilient the United States economy is. And they've done a brilliant job of navigating, I think, the interest rates. It's been pretty challenging for some families. I think there's a dichotomy out there. I think if you're a family of modest means, it's been pretty tough for you. It's been pretty tough for you, not just this year, but for a few years. And I think if you're, you've got some means, then things have been pretty well for you, if you've owned assets.
Yep.
So it's been quite interesting on that front. But jobs are hanging in there. We're still at pretty low levels of unemployment, and things appear to be holding up quite well, and the Fed seems to be navigating this pretty good.
What's a typical client for Grant Capital, and what do they need from you the most?
Yeah, so a typical client for us is, our really big jam is to really think about super high net worth clients like Jeff Bezos, Mark Zuckerberg. And what we like to do is drive those services, that white glove service, all the way down to clients, who are, let's say, somewhere around, 500,000, on the low end, and I would say maybe up to about 2.5 million. That's our sweet spot of where we normally like to engage clients. But we're very, very big around holistic, comprehensive planning. That's where Commonwealth, our firm really supports us well with a lot of great services that we can drive. We also run a very unique investment model as well that tends to be quantitative based to protect to the downside. And then lastly, the thing that we like to be known for is delivering exceptional client service. We feel that leading up to the pandemic, client service was lacking. During the pandemic, it became almost non-existent. A lot of people gave up on client service. And so we really try to rally around that and make that a big part of our practice of what we deliver for clients. So families and then also businesses. Okay. We help companies with helping them optimize and strategize their cash flow. We help them think differently about what they can do with their capital. So we do a lot of really exciting things with businesses, yeah.
First of all, I love that you said that's our jam, because that's how I roll. So
all right.
Yeah, I appreciate that. So when you're talking your jam to small businesses, I'm curious as to what are their questions and how do they differ from, say, the guy making $1 million or the guy making $500,000?
Businesses are first and foremost, it's about cash flow. and cash flow, budgeting.
You're going to say munis? Because this guy loves munis
right.
over here. Okay, go ahead.
In a high-tax state.
Yeah, obviously, munis, definitely are very important to high net worth families, but also to businesses as well. But cash flow is a very critical component for them, and it's something that keeps a lot of the leadership teams of businesses up at night of how they're managing their capital. Are they really optimizing it? They're always thinking about their short-term plans, intermediate plans, long-term plans. How do they deploy this capital? How conservative should they be with it? And so that's where we can really come along them, be with them every step of the way, helping them understand how they can optimize both their short, intermediate, and long-term, capital.
When I first started coming to these events, I was surprised that I thought most RIAs were pretty vanilla in the sense that stocks, bonds. I was surprised that a lot of these RIAs, because of their clients wanted, they want alternative investments in their portfolio. I was surprised that not only did they think about alternatives, but maybe the allocation to alternatives. How do you guys think about alternatives, whether it's private equity, private credit, hedge funds, that kind of thing?
Yeah, you got to have it.
Yep.
You got to have it.
How much of it do you have to have?
I think that, for especially a lot of our clients, I think it definitely deserves, if nothing else, a conversation with clients to let them know that we do have a broad breadth of alternatives available to them, whether it's private equity, credit, lending solutions. There's so many things in the alternative space, and it's a pretty hot topic nowadays as well. And so I love that about Commonwealth is that we continue to offer a pretty robust offering in the alternative space. It's definitely something that a lot of high net worth clients talk about. It's something that businesses talk about. And it's definitely something that I think deserves a place in the portfolio. How much? 5, 10, 15? I definitely don't think I've heard that some family offices are as high as 50% alternatives. So
Wow,
it's
that's
definitely
a lot.
garnering a lot of attention and a lot of adoption.
Is it more private credit? Is it private equity? Is it just like a lump thing?
Well, private credit has certainly been extremely hot lately.
Are
over
there a
the
lot
last
of good
several
products
years.
available to you guys?
Absolutely.
Okay.
Absolutely. We have quite a few of the major players in the space that are on our platform that we can offer clients. And it's growing and growing every day. In fact, we actually have a pretty big partner, iCapital, who is on our platform, and they tend to be a central hub for a lot of our alternatives. But yeah, you got to be in the space. You got to be educated up on it. It's an exciting space with a lot of really great offerings. And I like to say there's a democratizing of it, where it used to be just for that really high net worth client, but Commonwealth is doing some pretty interesting things where they're really getting those the entry points down to make it a lot more accessible by a lot more of the clients.
Norman, thanks so much for joining us. Really appreciate it. Folks on radio, you can't see it, but Norman is sporting his West Point sweater, class of '93. He served 5 years active duty after graduating from West Point, so we thank him for his service. Norman Grant, he's a managing director at Grant Capital, giving us his thoughts on these markets and on serving investors here. Coming up, we're going to have Matt Palazola. He's the insurance analyst at Bloomberg Intelligence. Yes, we only talk to him, it seems like, when there's a hurricane coming, but he's going to join us here and give us some thoughts about this new hurricane coming in towards Florida, what it means for the insurance industry and how the coverage will be, and maybe what the insured losses will be. And kind of what we've learned, I think, from all these hurricanes is there are insured losses, but then there are a lot of uninsured losses, and that's really where the pain gets a lot of folks. So we're going to talk to Matt Palazola on that, get his thoughts on that. And of course, we could provide in some on-the-ground reporting.
We got on-the-ground reporting.
On-the-ground
Although
reporting.
Currently in Orlando, we got nothing. If we were in Tampa, maybe that would be different. Could see the largest evacuation there.
And people are still at the parks. I was there yesterday. People were there. Hurricane be damned. They're out there going to see Mickey Mouse and all.
Maybe I go later.
I think you go later.
Yeah,
you
maybe
got
go later.
to go.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's check in with our next guest here, right here in Orlando at the conference. Virgil Kahl, President and CEO, Investment Advisor at Spring Ridge Financial Group. The firm is Global Wealth Advisors. Virgil, thanks so much for joining us here.
Happy to be here.
What's the conversation you're having with your clients these days? The S&P's up 20%. I don't know. We got an election coming up. What's the conversation like?
Well, I think I could speak for myself and many other financial advisors that since July, we're happy that the market's broadening out.
Okay.
Because for the last year and a half, we just had a concentrated market, and everybody was so laser focused on how am I doing compared to the S&P, and it got to a point where the S&P was no longer as diversified as we'd like it to be. And so I kind of start with, okay, most of my clients are in retirement or heading into retirement, and we've been blessed because of the extreme increases in interest rates to have better yield than we've had in more than a decade. And so when you know that you can make some money without taking a lot of risk, and you have many parts of the bond market that are trading below par, and yields to worse that are 6, 7, 8%, and you compare that to the higher valuations of the S&P, you start to think, okay, well, remember diversification. Remember that things don't go up forever, and income is a part of your return. And, you know, before price conscious and we increased, the S&P became more tech focused, and it was price up, price down. Income was a big part of a person's return prior to the zero interest rate environment. So to me, in this environment, looking to add income and to diversify, and thank God we've seen that now we kind of have a situation short term, just as of Friday, that we might have stocks and bonds going down together, right? Like we did last fall, August, September, October. But in August, when we had the scary sell-off, it was like, okay, bonds were doing their job. They were going up with this. So we like to think that right now, I think the market's trying to digest. Okay, so we thought the economy was slowing down, but soft landing. We were saying it's normalizing, and that's nice. It's a nice word, normalizing. It's, you know, we're way past the pandemic now. But it's kind of like, okay, a couple months ago, we got the data point that there was an 818,000 job revision, right? And then Friday, we get a surprise over 100,000 more jobs. And it's like, okay, which data point is correct, you know? And granted, the economy and the stock market, you know, the market's a leading indicator, right? So the market wants to get happy, but not too happy, to cause interest rates to go up, because then we'll have this volatility that shakes everything up.
So you're basically describing, you know, that soft landing, that Goldilocks. And to your point about the jobs number, Citi had a note out that said, look, they are skeptical about that soft landing and say we could see revisions later, and then that's going to affect how we view the overall economy. So if you're looking at a 60-40, is still 60-40 the right way to go, or like would you need some?
Well, not for everybody, right?
Right. Okay. So not for everybody.
But, you know, I think a lot of people would be happy to make, I can think there's a chart that if interest rates fall by 1%, we already got a 0.5% cut, that the upside to many parts of the bond market, excluding the 30-year Treasury, because I think that has too much volatility for most people, is like 5.5% to 12% returns on the upside, and maybe 2 to 4% on the downside in the bond market. And I'm thinking a lot of people that are heading into retirement or in retirement would be happy with the 5 to 12 with very low downside versus a market that's kind of riding high. And I'm only saying that from the standpoint of the growth part of the market. That I kind of think that, you know, decide how much volatility do you want to take to get that extra couple percent. If you don't need it, are you willing to take the 10% downside, the 15% downside? So I just love that income can buffer volatility now. I think there's great dividends in many of the value side of the market, and the international markets. And everybody's like, oh, the market's overvalued, but the equal weight S&P isn't overvalued. The small and mid caps are as attractive to the large caps as they've been since the year 2000. So there's just like a lot of dislocations that I see where, wow, like, why is everybody chasing this when there's all these other things that are not expensive, that if interest rates do in fact continue to come down, you have to kind of look at your portfolio and say, okay, now it's a different environment. We're not in a rate hiking environment, we're a rate cutting environment. What parts of the market are going to do well when rates are coming down? And it's the companies that have a lot of debt that get helped, you know, and wages are holding up okay, and people are still spending. So, you know, I think there's something to be said for opportunities.
If many of your clients are either in retirement or approaching retirement, How about alternatives? Is that not something for them? Because I hear a lot of RAs that are they do talk about alternatives.
Yeah, and
I
I do think alternatives have their space in a portfolio. A lot of people don't understand them. I think it's interesting, the media in general, we focus so much on the stock market, and then I'll have a person say, explain the bond market to me.
Yeah.
And then, okay, we're going to explain the bond market, then we're going to explain alternatives, and then how can a person track what that alternative is supposed to do? Because I think a client is comfortable when they understand their portfolio and why it's structured the way it is. And does that resonate with their thoughts on the economy and the world and geopolitical risk and all these things that we have to deal with? And days like today when we see, and even last week with the Middle East conflict, that when you have energy kind of being the sector that's going well, I'm thinking that's not a healthy market. Remember 2022, energy did well, nothing else did. So it's kind of worry about that.
So when you take a look, we were just talking about, bonds and where to take risk there. Do you think that the money, are you telling your clients that have money in money market funds or high yield savings account,
yes,
do they stay there or do they need to put that money to work elsewhere? And I guess when do they do that?
So reinvest is a big risk because people got kind of happy with their 5+% cash rates. And we've been talking to almost every client, if you don't need this money for the next year, if you need it, then keep it in a money market because you're going to use it anyway. But this is the time, and actually I would say the best time would have probably been last October when the 10-year yield was 5, right? And the bells rang, and it was like, oh my God, 5! We haven't seen 5 on a 10-year in a long time. So I kind of think even now, okay, the 10-year is above 4, and the market doesn't like that, and everything's kind of repricing short term. But I think that if you consistently invest and you're diversified across all areas of the income market, knowing that 90+% of your return is going to come from your starting yield, I think it's a nice little setup.
So here we are at the Commonwealth National Conference, 2,000 plus fellow RIAs here. Why do you come here? What do you hope to learn?
I just think Commonwealth Financial Network has done a fantastic job of attracting like-minded professionals. There's a lot of people that are serious professionals. We like to exchange ideas. We learn from each other. There's no jealousy.
I was like, aren't you all competitors too?
I don't think so.
No,
I think we compete with ourselves, and we try to make ourselves better. So I've gotten a lot of good ideas from my fellow advisors, and I've exchanged some things that I thought were useful, and we all become better, and the industry becomes better because we share ideas.
And how are you growing your business right now?
It's mostly referrals. If we do a really good job for our clients and we stay in touch with them, and we do a lot of people are doing virtual meetings, but we're doing a lot of in-person meetings. That's kind of the nature of our business. And I have a fantastic team. So, I can't be everywhere at all times, but we just have a wonderful team, and we keep our clients very close to us. We know exactly what's going on in their lives, and we know how to adapt their portfolio and their planning to the changes that their lives are.
Where are you based?
We're based in Reading, Pennsylvania.
Okay.
It's Wyomissing, but most people don't know where Wyomissing is. A suburb of Reading.
Right. Okay. So what's a typical client for you guys?
You know what? People have a little bit more money than they used to have. Like, I've been in the business for over 20 years. So I would say, the average net worth of a person, if you include their real estate, is probably like $1 to $2 million. But there are people we service the parents of baby boomers. We service the children of the baby boomers and sometimes the grandchildren. So when you say what's the average client, there's a lot of our client base that is the family members, which we want to know the family members. We want to be part of their lives.
And so and it's like a passed down wealth effect, right? And
Exactly.
getting to know, and how's that going?
I love when a client will bring in, okay, so my son or daughter is going to college and she's considering this industry. Can you talk to them?
Okay. Oh, that's cool.
I love that.
Okay.
And I love to see their eyes light up, like they're really interested in it. And then sometimes they become interns, and we set them out to the universe to do good things for good people.
First, I was telling my friend about what an RA was, and her eyes just went glazed right over. But I'm glad you get that from the young kids.
So we're all blessed to be in this industry. To gather knowledge, share knowledge, and improve people's lives is just a wonderful industry.
Virgil, thank you so much for joining us.
Well,
We appreciate
thank you
getting
for
a few
having
minutes
me.
of your time. Virgil Kahl, she's a president, CEO, investment advisor at Spring Ridge Financial Group, giving us her thoughts on these markets here.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm Alex Steele alongside Paul Sweeney. We're broadcasting to you live from Orlando from Commonwealth's National Conference for Financial Advisors. This year's theme is The Future is Now, and the mission is to help advisors build a blueprint for their future and empower advisors to navigate business transitions. And this is the 10th year that Bloomberg Radio has broadcasted live from the Commonwealth's National Conference. Joining us right here right now in studio, in our makeshift studio, I should say, is Kris Maksimovich. He's president of Lewisville Headquarters, Global Wealth Advisors. He's based in Dallas, and he joins us right here in Orlando. Kris, good to see you.
Good to see you. Thank you.
First off, just talk to us about the clients that you serve. Who are they, what their net worth is, and what they're kind of planning for in their questions.
Yeah, we're a holistic wealth management company.
What does holistic mean?
Meaning we really cover every facet of their financial life, ranging from asset management to their estate planning, retirement income planning, to business exit planning for our business owners, and really try to step into their financial shoes the best we can to understand what they're trying to accomplish and help them get there.
I live down at the Jersey Shore, and you drive down the coast, and it's like any part of any coast. Thousands and thousands and thousands of homes on the water, a couple $1 million house, $500,000 boat in the back. I'm like, who are these people? And because there aren't that many Wall Street and New York law jobs for all these people.
Yeah.
These are real people with real businesses. That's my conclusion. And they're creating real wealth. How do you talk to those people when they maybe sell a business and they got to think about what to do with it all? I've already got my house at the down on the water. I've got my boat.
Vespa.
Family's all. I got my Vespa.
He has a Vespa.
Family's all educated. What do I do with this stuff now?
Yeah, the conversation goes from, God, I built this monstrosity of a business all my life, worked hard to get there, accomplished all the things I wanted to accomplish, but now what, right? And it becomes, for a lot of our clients, about legacy, passing it on to the next generation, and in some cases multiple generations, and not having it become a disruptive force that tears the family apart. I think that commonly, that's the biggest issue our business owners face as they exit their business.
If they don't exit and they're staying in it, I'm assuming cash flow is super important. So what do they come to you for to be able to have sort of cash on hand, et cetera?
Yeah, it starts with basic financial planning principles, having your cash reserve intact and having liquidity, available for all of the unforeseen expenses we can possibly think up. Hurricanes, for our Florida homeowners. Then from there, continuing to build upon, a framework that, hey, if these are the big ticket items I have in front of me the next 3-5+ years, I need to have liquidity at those stages as well, right? And I think too often we're chasing illiquid, promising, potential investments, not taking that into account.
So what are the types of questions you're getting from your clients these days? I'll just leave it at that. What do they really need from you today? Maybe how's that changed over the last 10, 15, 20 years?
Over the last 20 years, I've been doing this 24 years now, the fast pace of news drives a lot of emotion, right?
Good. Well
so
done.
Just last week, I had multiple calls on, the port strikes. Oh my gosh, what is this going to do to the markets? And my response was, we've been through this before. Right? We've had strikes before, and more often than not, it's not even a news item in a few days because they probably kicked the can down the road, and it wasn't minutes later, they pushed it to January 15th, I think, right? We don't make decisions on short-term news items.
One thing, though, that isn't short-term is what the Fed is doing. Like, yes, it is, like what the bets are, what they're going to do versus the longer-term, what the Fed funds rate looks like. But what it does mean is lower yields. Even if they're stickier, they're still going to be lower than they are, say, today.
Yeah.
That feels like a done deal. So when and where do you tell your clients to take their money out of money market funds or high-yield savings accounts, and where do you tell them to put it, and when do they do that?
Yeah, great question. We've had, numerous discussions over the last 2 months about positioning, preparing for that, and in some cases, I mentioned illiquidity. in some cases it makes sense to take some of those liquid funds and move into short-term illiquid, positions such as money market move to CDs to lock in a longer-term rate. It's a dilemma because obviously rates are coming down, and you do have the opportunity to lock in certain bond instruments or other fixed income instruments right now, but then you take on illiquidity and you've got to go back to that balance.
You're down in the Dallas-Fort Worth area, one of the best economic stories in this country for the last, 50 years it seems like, at least since I've been in the business. And I know that J.P. Morgan, Goldman Sachs, Morgan Stanley, they put their best people down there in the wealth management. They're opening up wealth management offices. They're not messing around. Yeah. How do you compete with those guys?
I don't necessarily think we compete with them. I like to pull some people from them, but
yep.
I think at the end of the day, there's like you said, it's booming down there, and there's enough people to go around.
Okay.
Right. But we also bring different things to the table. Where they might specialize in certain banking instruments that we can't get our hands on, that's really not our focus anyway.
Mm-hmm.
Wealth management, there's 100 different ways to do it, and ultimately our clients have faith and trust in us that we're doing the right thing.
That's what it always boils down to, is relationships. That's what we keep hearing over and over on that front. I know you mentioned that you want to kind of stay away from short-termism, but we do have a U.S. election. Mm-hmm. You do have the idea that a budget deficit, fiscal deficit, is just going to keep growing no matter who's in the White House, and that becomes a real issue. Yeah. When do your clients care about it? Because you could have said this exact sentence like 25 years ago.
Yeah. I mean, they cared about it when I got in this
25
business
years ago,
so
and they care about now. Yeah.
It's an issue that continues to build and build and build, and eventually we're going to have to deal with it, and it's going to be, I would think, a pretty negative, or have a negative impact on the economy and markets and a lot of wealth. But we have one vote, right? Every one of us has an opportunity to get out and vote for who we think can make a difference there, and I think that's where it starts. I don't have the answer to it, though.
Yep, I don't think a lot of people do. Kick the can down the road. Kris, thanks so much for joining us. Kris Maksimovich, President, Lewisville Headquarters at Global Wealth Advisors, located down there in the greater Dallas-Fort Worth Metroplex down there, which just keeps getting bigger and bigger and bigger.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.